And with no further ado, we'd like to start our first session, inviting our speakers for their initial remarks. On stage, we'll have Sean Keeney, co-founder and CEO of Climate Bonds Initiative, with Mario Torres, Senior Manager for Finance Motion, and Fanny Doucet, Chief of Sustainable Finance at Scotiabank. So I would like to invite Sean Kidney, the great creator of Climate Bonds Initiative and a great speaker. Sean, the floor is yours.
One of my disabilities. It's an extraordinary pleasure to be here at UBS, which we're very grateful for the provision of the facility and support. We've been working with UBS, and particularly with Silvia Coutinho's. We have the privilege of sitting in the front row for so long, for 10 years since we first met, and we've been part of together of the growth of a sustainable finance market in Brazil, in Latin America, which you have to say is going amazingly. You have to say is going amazingly. Of course, in the next panel, we'll talk about how we need to make it much more successful. And let me give you a couple of backgrounds to that panel, if I might. You know the challenges we currently face. We face an extraordinary challenge around emissions reduction. We are, unfortunately, still on target for a world of unlivable warming. Something to bear in mind. We've been travelling at the worst possible trajectory of the IPCC Intergovernmental Panel on Climate Change projections. We're starting to feel climate impacts. I don't need to tell Brazilians about floods or heat. But in the last couple of months, I've been in Japan, in China, in India, as well as in Europe and the US. And I'm going to tell you, in every single country that I've been to, people are talking about the extremes of that country. People are not joining the dots that everyone's feeling this. But around the world at the moment, we have extreme weather everywhere. We're beginning to feel climate change way faster than we thought. In the Brazilian models, we expected to see significant floods from the 2030s onwards. It started already. Things are going to get difficult. Do not assume that the floods are a one-off incident. They've moved from 1 to 100 to 1 to 200-year incidents to 1 in 10 or more frequent. And they'll happen other places. Do not assume that the heat of last summer was unusual. It is the new norm. But do not assume also that the social dislocation and the various other measures are going to be able to be dealt with, because it's going to become much harder for us in future to address the social consequences of climate change, the ecosystem consequences of climate change, the economic consequences of climate change. That's the challenge we face now. And remember that we've already reached 1.5 degrees last year. We expect to make it a fairly permanent temperature rise by 2027, and so on. I have to say, it's distressing. It's distressing if you're here watching the floods down south, the extraordinary impact on people's lives. It's distressing when you're in India and you realise that 52.9 degrees Celsius in Delhi involves something like 3/4 of the population that does not have access to air conditioning. How do they live? How do you survive that for day after day after day is something that I don't know. We will see large-scale mortality events in the near future. So that's the bad news. But there is good news. The first good news, I need to say, is that we have actually had an impact. Since Sylvia and I started talking 10 years ago, in fact, a lot of policy changes happened. Is it enough? No. But is it happening? Yes. On the current projections of climate change from the modelling that we see, and we're part of a group called the Inevitable Policy Response that is doing forward modelling around economic changes, we think we've lopped a 1 degree off the likely warming of the future. That's an extraordinary achievement based on work that we've done in the last 10, 20, 30 years. The biggest win being in renewable energy, thanks to large-scale procurement through feed-in tariffs in Germany and then in China. The cost of solar and the cost of wind has dropped like a stone. Frankly, it's now cheaper anywhere in the world if once you take out the subsidies for fossil fuels and the various other impediments that are there. So that's actually a win. In 2022, 90% of all investment in new electricity generation was for clean energy. Whoa! Now that's a win. That's an extraordinary change. Only 10% for fossil fuels. And that's the fossil fuel stuff is going to be extinguished quite soon. So we've got legacy assets to get rid of. We've seen in the last couple of years, since the Biden climate summit of 2021, really major policy issues in country after country. Of course, in Europe, that's been amplified by the Russian invasion of Ukraine, which has forced Europe to become more aggressive. But the Green Deal plans that were in place before that invasion were already amazing. Already amazing. Renewable energy invest EU, the sustainable aviation fuels policy, great opportunity for Brazil here, where the European Commission is mandating that all airports have to provide 5% sustainable aviation fuels by 2030, as subsidising the price difference. So they will cover the extra price to kerosene in Europe. Like suddenly, we are creating a large sustainable aviation fuel market in Europe. We need suppliers, quality suppliers that are not going to be caught up in food substitution, i.e. not corn from the USA. You get the idea. We've seen major policies, of course, in the US. The Inflation Reduction Act is a win. Extraordinary boondoggle for clean energy. It is largely, by the way, clean energy and hydrogen and various other industrial changes. In Japan, the Green Transformation Program, which the Japanese government issued a bond to fund in February and then a new one last week, and up to about $14 billion of capital raised for it. The certified climate bond was the February bond. Is a yen trillion program to green Japanese industry and to make Japanese industry a leader globally in green technologies. Remember that, because that is a clue to what we've got to do. In China, where I was a couple of weeks ago, they installed 239 gigawatts of renewable energy last year. That is extraordinary. That is 40% plus of the global installation. And it's continuing to grow. We expect it to grow 20 to 25% this year. Astounding figures. And that's, of course, fueling the growth of low-cost solar panels and low-cost wind turbines and the like. So change is happening. And then, of course, we have the whole global central bank conversation. We have the G20 conversation here, which is Brazil is leading this year, around sustainable finance, et cetera, et cetera. There is no doubt that the ship of the global economy has started turning. There is no doubt whatsoever. And this is something for us to savor. This is something for us to think, we have succeeded. Now, we have to temper that with two bits of caution, of course. While the economy is shifting, we haven't succeeded quickly enough. We haven't succeeded enough. We're probably only 20% of the way to what we need to do. But nevertheless, hey, I'm going to take a moment of reflection to say, whew, we're making progress. On capital, we're making progress too. We need to be seeing something like $9.2 trillion a year of capital flowing to climate solutions. But about 2/3 of that is the reorientation of existing capital flows. So water investments need to start taking into account resilience, for example. Oh, that seems obvious now after floods, but would you believe it's not obvious in utilities around the world? Transport systems need to be electric. Let's give up now on the old models, which are still got emissions in them. And frankly, that's happening mainly because China has invested so much in electric vehicles. I will make a prediction here. You won't see new petrol cars being sold here in 2030 in any kind of volume whatsoever. They will have gone. Why? Because the Chinese manufacturers are going to be delivering electric vehicles to you at half the price they currently sell them to you, because the cost curve is extraordinary in China. Already, BYD sells cars in Shenzhen at 1/5 the price they sell them in Europe. The challenges of selling in Europe are to do with tariffs, various other measures. That kind of price difference is not one you can really fight against. And of course, it's happening in rail too. Electric rail is being built by the Chinese and by the Japanese all around the world. We're now seeing the proliferation of high-speed rail networks in places like India. China has 80% of them, by the way. So these things are changing. But we're only 20% of the way there. Moment to savor successes is over. We have to quintuple, I'm afraid, the amount of capital flowing that we can track towards climate solutions. Hey, we don't really care if it's called a green bond or a sustainable bond. We just care that capital is being invested. The green bond, the labelling scheme is useful because investors like the protocols. They like the rules. It makes it easy for them to talk to their clients. And this is why BlackRock tells me that green bonds have been the most successful sustainability sales product they've ever had, because it's simple. There's a protocol, there are rules that surround. So it's a useful marketing tool. But what we care about is capital flowing. We care about real economy changes. We care about steel companies that are investing in hydrogen, not coal, for new blast furnaces. We care about government policy that supports all of these changes, and so on. That's the job to be done. Next, the three things we need to see. Clearly, there's still confusion about what it is that we have to do. The number of conversations I have around the world about gas. Gas is good, isn't it? The IPCC kind of killed that about 3 years ago. New gas plants, because of leakage rates across the supply chain, are not necessarily better than coal plants. They can sometimes be worse. We have to be clear about that in our guidance to market. That's why Brazil is now doing a sustainable finance taxonomy to provide clarity about what qualifies. Now, you know, gas isn't a big issue in Brazil. What really counts is in agriculture. What are sustainable practices? What do we say about livestock farming globally? How do we relate that to the science? It's about the science, it's not about opinion. As you know, there's a lot of opinion in this space. So in the Brazilian taxonomy process, there's a convening of experts, and you will see a first draft coming out for the COP this year, and then a final version for Belém next year. And that will be an incredibly important development, as it has been in all the markets around the world where we've been working on taxonomies for the last couple of years. In Europe, I can tell you, last week in Prague, I had banks coming up to me, Czech banks. This is not an area that's a hotbed for climate activity, saying to me they've got teams working on what their green portfolios are and how to improve green lending based on the taxonomy. It's clarity, making it easy to understand what qualifies, fuels the market. But we need to make sure in the Brazilian taxonomy that we address resilience and social. This is not an area where mitigation is going to be our biggest issue. Of course, avoided deforestation. But avoided deforestation isn't about stopping something, it's about creating livelihoods in Amazonian states that will allow people to have choices that don't involve cutting down the forests. We need to make Amazonian states richer as part of this. What does that mean for the taxonomy? And so on and so on. You get the idea. Then we will need more market support mechanisms. Some of them are simple. The sovereign issuance of a sustainable bond is a market support mechanism because they issued it to provide benchmark pricing and a yield curve and maybe some liquidity for the private sector. Fantastic, and it's worked. We've seen sustainable finance issuance grow by 50% in Brazil since then. We will see more, and they will be doing more. But of course, there are so many more things we need to do. We need to address a bunch of incentives. We need to address some of the capital market challenges. The illiquidity in the bond market is a problem here. Zillions of little incentives means people hold their bonds, they don't trade them. Pension funds can't participate because they need liquidity, because when Sylvia finally retires in 20 years, they've got to be able to pay a pension. And if they don't have liquidity, they can't do that. So there are challenges in capital markets reform that are material and pertinent to the development of capital flows that will support our sustainable changes. But of course, there are many. We have here some representative development banks that are now going green like nothing. It's fantastic. And 2 weeks ago, I was in the New Development Bank's offices in Shanghai, the BRICS Bank, and they are going green. You will see a lot more programs coming out of them. One of the last cab taxis on the rank. But lastly, and most importantly, given the challenges we face, we have to plan. We now need to plan. We now know what crisis looks like in the floods. We now know, just a taster, teaser of what's coming through. We now know also what opportunity looks like. Look at the impact of electric vehicles around the world on mineral supply chains. Whoa, suddenly lithium is a prized product. But it applies to nickel, it applies to copper, it applies to a bunch of things. No longer fossil fuels, now green minerals. What does it mean for agriculture? What does it mean? What the sustainability agenda in China, who have ravaged their landscape and have adulteration scandal after adulteration scandal, mean for the future of Brazilian industry, Brazilian agribusiness? Well, clearly it means an opportunity for value-add, sustainable produce being sold in China because they are desperate for clean and green. And we have to make sure that we manage the Brazilian brand in such a way as we don't accidentally destroy that. This is going to be tough. Of course, Brazilian industry is a long way there already, but there's work to be done to ensure that the export opportunities for Brazil in the new economy that we are building globally are strong, are good, and can help us deliver the wealth for citizens of Brazil, including the citizens that are going to be most vulnerable to climate impact. We need them to be richer so they can bounce back every time we have a crisis. Because I'm telling you, there's going to be crisis after crisis after crisis. There are 3 features of climate change, as a rule. Those 3 features are famine, collapse of crops in droughts and floods, pandemics and war. In every climate change incident in the last 2,000 years that we know, that's what we've seen. We are on a race now to get our economies and to get our global economy ready, prepared for these crises coming through to avoid the risks of those things coming true, those 3 horsemen of the apocalypse. Brazil has a particularly interesting position globally. It is a bridge between economies. It's friends of China, it's friends with the US, it's friends with Russia, it's friends of India, it's friends of South Africa. This is a prize in the current geopolitical stress that we face. A prize because collaboration around the world is essential if we are to survive. It's not going to be something we can just solve within Brazil. Brazil has a leadership opportunity to take this forward. I don't know how you're going to make that work. All I can tell you is it's an incredible opportunity to change, to improve, to heighten the role of Brazil in the global economy. Driving the domestic agenda around sustainability is the first step, the most important step to achieve credibility in that and to achieve opportunity. If we don't construct this change agenda as opportunity, we will fail. But we can, because the global economy has started churning. And green bonds, sustainable bonds, are in some ways just the symptom of that change, the key performance indicator for us. We need those things to remind us that stuff is happening. It's been a wonderful ride, Silvia, for 10 years. I'm thrilled to be here with you again today. I'm thrilled also to be in your company, everyone, here today, because at the end of the day, you're going out and making these changes. We need deals. We need investment. We need capital to flow. We need investable opportunities to be constructed. We need advice given to government about how to make sure they have enabling support and not difficult support. There's so much to be done, but we've started. Remember that. We're 20% of the way there. Thank you, Julia.
Thanks, Sean. Very inspiring as usual. Thank you for your words. And now, without further ado, I'll invite Mario Torres from Finance in Motion. And Finance in Motion has the first dedicated green bond fund in Latin America, Green. Mario, over to you. Good morning, everyone. It's a pleasure to be here with you. I'm sorry I'll have to speak English.
Spoke in front of me, and he said it in more eloquent form, so I will be very brief. Good morning to everybody, and welcome to this Climate Bonds Initiative Connect event in Brazil. As I said, my name is Mario Torres, and it's an honor to represent La Green and Finance in Motion and this gathering dedicated to sustainable finance and climate resilience. First and foremost, I would like to express my gratitude to the Climate Bonds Initiative for organizing this event and the dedication to mobilizing global capital for climate action. Your work is very inspiring and essential in steering the world towards a sustainable future. We are gathered here today, as Sean said, at a critical juncture in our collective fight against climate change. The recent IPCC reports have made it very clear. The window for action is rapidly closing. The urgency for the situation cannot be overstated. The impacts of climate change are becoming more pronounced and frequent, affecting ecosystems, economies, and communities worldwide. It is within the context that our discussions during this event hold profound significance. We must collectively channel our efforts, resources, and innovations to accelerate the transition to a low-carbon, climate-resilient economy here in LAC and in the whole world. Here in Brazil, with its vast natural resources and unparalleled biodiversity, the country stands at the forefront of this transition. It is a country with immense potential to lead by example and in sustainable development and climate action. However, this potential can only be realized through the concerted efforts of all stakeholders, government, private sectors, civil society, and financial institutions. Brazil's leadership in this arena is crucial for the country and the global community. Finance in Motion shares this commitment as a leading impact asset manager. We have consistently worked to channel private investments into high impact areas such as energy efficiency, renewable energy, and sustainable agriculture. Our projects have demonstrated that financial returns and positive environmental impact are not mutually exclusive. In fact, they are synergistic. By investing in sustainable projects, we are addressing the pressing challenges for climate change, fostering economic growth, and creating jobs. Today's event is an opportunity to deepen our understanding, share best practices, and forge new partnerships. It's a platform to discuss our challenges and opportunities in scaling up green finance. We will hear from experts and practitioners who are in the cutting edge of sustainable finance, and I encourage everybody here to actively engage in the discussions. Your insights, experiences, and ideas are invaluable in our collective effort to drive meaningful change. In closing, let us remember that the fight against climate change is not just a necessity, but an opportunity to create more sustainable, equitable, and prosperous world for future generations. The actions that we take today will define the legacy we leave behind. As we engage in today's discussions and explore new pathways for sustainable finance, let us do it with urgency, determination, and optimism. Again, thank you all for being here and your commitment to this cause, and please enjoy the event.
Thanks, Mario. It's always good to have this partnership with you with Finance in Motion here in Latin America.